Hey guys, what happened this Thursday?
Hey Scott, thank you, man. Not a lot. Well, there is a lot going on these days. Hey Jamie, how are you, buddy?
What's going on, Andy?
Yeah, there is quite a lot going on in this market. Although today was kind of what you would expect, and although we had a little move there at the end of the day, but kind of an inside day after the big sell-off yesterday. So possibly setting up for some action tomorrow. But hi everybody, thank you so much for joining us today. We got a good crowd and still more coming in. My name is Andy. I'm joined by Jamie. And this is the trading studio. So let's dive in. First, let's go through the disclaimer real quick. Once again, people, this is for educational purposes only, okay? We are content providers. Any type of investment, okay, that is not what we're trying to do here, but we will be talking about some strategies and some setups, but just remember, if you are seeking investment advice, you want to look for somebody who is licensed in that capacity. That would be a stockbroker, an RIA, and so forth. But let's move on. That should cover that section there. Talk a little bit about our 5-star support, education, and subscribers, and those that are in here for the first time, that it is a very powerful software, and for some people it can be a little intimidating when you first download it, but listen, we want to let you know that you can make it as intimidating as you want to. It can be very simple just by clicking a few channels, and you get instant access to alerts, top list, and all sorts of good windows. And we're also here to help you. And let me show you these areas where we can help you. Most of you have probably already been in the traders room. If you haven't, get in there. It's free for everybody, even if you're not a subscriber. It's moderated by Barry Einerson, and he does a great job. And not only does he do a great job trading and let you see his software as he's navigating the market, but also he's great answering questions that you might have about the software. So don't hold back. He wants you to ask questions. He tells us all the time. And then we have webinars throughout the week in the same time slot. That would be 5 Eastern time. Jamie, myself, and Steve, usually we will, every time we'll pair up in twos unless one is away for some reason. And then on Wednesday, we do give you our CEO, Dan Merkin, and Brad Williams, our CTO. So that's a great place to see the new bells and whistles that are about to come out, and also a great place to just kind of view a demo and ask questions. All right, and guys, we're getting a lot of people in the support webinar. You see down there at the bottom, this is every day at 12 Eastern time. It's a live stream on our YouTube, and Scott, when we get finished with our presentation today, we'll have a slide up for you to show you where you can join that. And we open that up to for people to come in and ask questions about the software, especially those who just joined and have any questions. That's what it was basically invented for. But we're getting a lot of people in there, but we need to get more people who just started. So don't forget, this is every day, Monday through Friday. We have a live stream, and we'll have a slide up later and show you how to get there. And that's where we want you to come and ask questions. So it's better than coming to our online chat, because we cannot do a presentation for you there. It's much more difficult for us to show you how to do something. All right. Let's talk a little bit about our simulated trader. Some people call it a paper trader. This is really cool. It's a really cool interface. I've traded on over probably 12 different platforms, and boy, this is really really nice, intuitive, easy to use, and it's free. I mean, I shouldn't say free. You have to subscribe to Trade Ideas, but there's no extra charge. If you do it through a broker, a lot of them require you to connect. Well, you have to connect through their brokerage platform, and most of them require that you fund an account. Okay, you do not have to do that here. Obviously, we're not a broker. But anyway, check it out. You have access to it even on the standard plan. You can use this paper trader or simulated trader. Okay, agenda for today. We're going to do the market recap as we always do, and then we're all going to do the Holly recap. Not a whole lot to go over today, but a couple of decent trades there in Holly. And something I shared with you last week is the big bounce short, and we're going to revisit that one today because I really think people, I mean, all of my best trades lately in this market have come from this top list. And I will show you example. I even announced several of them before they even moved and told you I was in it. Now I'll go back and we'll go back and look at those and just show you how, you know, how this software can be used to catch, you know, really good, not only longs, but good shorts as well. And then what? Then I'm going to talk. This is an important subject right here. Is this upside momentum in bear markets? Okay, because I know how a lot of traders are. They love to trade the momentum stuff. And if you're like me, uh, you know, day trading for 17 years, it's kind of hard to get out of what you're used to doing. And if you've been trading over the last 10 to 12 years, momentum, and then all of a sudden this stuff's not working for you, there's a reason for that, and it's a simple reason. It's we're in a bear market now. There are more buyers than sellers. Excuse me, more sellers than buyers. Uh, and I'm going to show you examples of today where momentum, it can be very short-lived, and if you're not in it early and selling early, you can be in trouble. And there's also a lot of head fakes. So this is not a time to be buying breakout highs. It's just a different ball game right now, and I'm going to, you know, present you with some ideas of just how to stay away, you know, play different strategies. But yeah, you don't want to be chasing momentum. It can work sometimes, but in these bear markets, more times than not, you're gonna find yourself holding the bag. All right, so let me bounce out of this and pull up the spies. Yeah, this is a good example of one today that I tried. Flattered it, but get to that in just a minute. And let's pull up the daily. May look at some other time frames here, but this is what we have in the daily. I mean, very customary of what you're going to see in bear market tape. A lot of back and forth action as you're trying to find a bottom. Of course, we had this precipitous fall in a month's time where we set all kind of records as far as entering a bear market in a short amount of time frame. Nice bounce, just like when you stretch that rubber band, eventually it's going to bounce. Had a really nice bounce up here to this 20 period moving average and almost textbook. The dead cat bounce, got tired. Yesterday was pretty nasty gap down and pretty nasty move closing on close to lows, bounce a little bit. And today we did a little inside bar, you know, that kind of could be a little, you know, body cloud cover there, they call it. What do you call that? Forgot, for bullish, I can't remember, but nonetheless, we're still, don't get too excited when you see these kind of bars in a tape like this, because like Steve was mentioning the other day, you know, finding a bottom in this in a bear market is a process. And yes, this is a bear market. And I would love to say, you know, boy, if we can get through this, you know, red line, we can power up here and here. Next thing you know, we're up here at 300. It usually doesn't work that way. It's a process, and you know, I would be a lot more surprised if we didn't go down and test these lows at some point. Hope I'm wrong. Honestly, I like to be bullish. It's good for our 401ks, but you know, you got to accept what the market's giving you. And right now, I think, you know, we could be in for some turbulence. But nonetheless, you know, this is where we stand. And, you know, if we can get a close, you know, we have not closed above this 20, got right up against it here, and maybe we can get a close above that. Maybe we can get 2 or 3 days of action. But you need to watch this one tomorrow, because this is an area where we're definitely having some trouble at this 20 period moving average. Doesn't surprise me that we got through the 10 at all. I mean, like I said, when you have this kind of record-setting drop in a short period of time, you got a very, very fast 10 period moving average. That doesn't surprise me at all. I would be surprised if we bust through and maybe take out these highs, but that would definitely be constructive for maybe a you know, a longer move. Just go ahead and draw a little line here so if you guys can't see my cursor. you know, that's the area I think we need to get above. And then of course we still have to get above this 20 period moving average. So I'll be watching that tomorrow to see if we can make an attempt to get above that, especially if we can close above that. If not, if we take out these lows here, at some point we could be looking at a visit real quickly, you know, down to these levels, which if you asked me, if you held a gun to my head and told me to bet all my life savings on where we're headed next, I'd probably, well, if you put this line up here, maybe I would. I'd probably say it's more likely I'd probably put my money on testing this low versus testing maybe this high right here, making an even drop here. All right, Jamie, let's take a real quick look at the Qs to see if there's anything different there. Now, they are slightly above, let's just say they're right at their 20 there. Not a whole lot of difference there. Diamonds should look the same, and they pretty much do. IWM, let's see if there's anything going on over there. Nah, that's even weaker. It's still below its 10 period moving average after that drop from yesterday. But Jamie, unless you're seeing anything that I'm not, you know, this is still a bearish tape, and not a whole lot has changed other than some a bounce off lows.
Yeah, I would agree completely. I mean, we're still, you know, the trend is down, and you know, based on what you show in the SPY right there, this little range that we're developing, right? Couldn't quite make it to the top, but we've made it down to the bottom, and you know, a little sideways action. Maybe tomorrow and the rest of the following week wouldn't necessarily be a bad thing. You know, quite a bit of room in that little channel that's developing there. So up and down, sideways, you know, moving up and down in the range while we go sideways still presents some decent trading opportunity, but it's not the hair pulling and face ripping action that we saw of last week. You know, volumes have fallen considerably. You know, we've been talking about this for the past few days while the market was open. You know, relative volume on these big tracking ETFs can't even finish at normal, well below normal. Most of the day is without volume, and then you have your little spurts. You know, it's like the other day, all quiet on the home front, and then boom, the move comes out of nowhere, and then it goes quiet again. So, you know, that's kind of what I'm expecting for, you know, tomorrow's Friday. We all know how it can be quiet or it can be quite active on Fridays here lately, depending on if it's options expiration or, you know, things of that nature. But we've all got front row seats.
And I guess we'll have job numbers in the morning too, won't we? It's the first Friday of the month. So,
And
yeah.
Yeah, and of course, extenuating circumstances are going to impact those numbers. I think everybody will say it's baked in, maybe, but who knows?
Yeah, I think fundamentally, if you look at this market, one thing that makes me nervous, and I'm mostly a technician, just like Jamie, but the amount of uncertainty out there. When you have this much, markets hate uncertainty more than they do anything. So with the coronavirus still out there, and it's recently extending the days, we'll have to see what happens. But you know, until this is resolved, I think we can expect some volatility and maybe even possibly some new lows. And you can see this alert that I had down here at the bottom around 214. I'm going to put up the monthly in case some of you guys missed it last time and show you what I'm looking at here. Yeah, Jamie knows exactly what I'm talking about because we were both anticipating this level on the last move. But here's the monthly chart, and you can see there are tons, huge support. So I think a lot of people were stacking their bids maybe in front of this, hoping for a bounce here. We got one quicker before we really, in my mind, really tested this level. So I always say, you know, price action when it comes to charts, they have a destiny at some point, and I think this may be a destiny that to at least come down and touch that. And I really wouldn't be surprised if we do go to that level. That, you know, could do shaking some trees, and who knows, and maybe, you know, maybe come around, you know, even the 200 level. But we'll wait. We'll wait that. We'll save that for another day.
Talk about an inside candle. You know, look at that thing. Crazy.
Yeah, exactly. Yeah, for sure. All right, Jamie. Well, that's about all I have on the market recap today. If you want to take it over and take a look at some of the Holly.
Sure. And this will be pretty short and sweet because there's really only one that intraday presented more opportunity than what you're seeing here because number one, we don't really have anything showing a decent spread between moderate profit right here and conservative profit right here. Now we do have one that technically fits the bill, our little friend CUK here, also known as Carnival Cruise Lines. I mean, these stocks are going to mimic one another. This one is just the ADR, I believe, ADS, whatever you want to call it, but it's Carnival Cruise Lines. You know, we were actually in this trade today, and it was kind of like pulling teeth. You know, we're already beaten down so much, even though it is flirting with all-time lows. It's not like it's just careening down. Holly calls that signal right there at 776, and right off the bat throws a nice little wiggle, comes back down, dips all the way back up. So I mean, this thing was just, you know, it's like pulling teeth with these shorts that are at these lows like this. But you know, that's the way the ball bounces. So bottom line is, the good news is, even though it was kind of volatile and making you think that you're going to get stopped at any time in the first, let's see, 1 hour after the entry, still, you know, left a pretty good margin between there and the hard stop, and finally did capitulate, you know, to these lower lows at the end of the day, but didn't give up a whole lot. You know, what do we make? Risk $100 to make 66 bucks? We'll take it. You know, just not a lot to write home about. It's not like it was ever any lower than these levels right here. You know, if I just drop a line right here, but it wasn't, you know, it wasn't ripping your face off either. So just sticking in that one would have yielded, you know, a better result than what Holly did right here. You know, in the money here, snaps back up, she closes it out right here, coinciding with the shaded area. So technically, we did have some moderate to conservative spread there. Now, the one that presented the most opportunity today was the short in Cube, all right? But even it was not easy to sit in because we had the original short sell right here, 25.41. 15 minutes later, we're at 24.95. Everything's hunky-dory, only to be back above the entry line and pretty close to a stop out in the next 15-minute candle. So sitting this little wiggle right here, hey, if you stuck to your hard stops, which, you know, we're all guilty of not doing that from time to time, but that is what they're for. But this is just a testament to the nature of the market and shorts at this point in time, in my opinion. There were some clean shorts out there that worked phenomenally, but they're not the norm right now. There's a lot of shaking the trees going on, especially in these shorts that have been beaten down. But look at Cube here. It was well off of its bottom. And, you know, that's kind of been the theme here lately. Well, if they're beat down like Carnival Cruise Lines, you saw the action that presented itself, even though you could still make a little bit. If you're shorting a stock that hasn't been beaten down, well, you have to assume, well, it's strong for a reason, and they're not coming off easily either. And then, as we all know from seeing the run today in some of the oil stocks, the ones that do rip up, they're going to roll over at some point in time, you know? So there's a lot of long and short opportunity out there, but right now it seems like, you know, if you're not pairing profits quickly, they're not sticking around too long. But having said that, got a little off topic here. If we did just stick to the game plan, which is always recommended, especially in these markets, stick to our hard stop, you know, this might have gotten a lot of people out, but then in the following candle, of course, that's where Holly closes it right there. Q making 50 bucks on a $100 risk. So if we take note of the exit price here, entry at 25.41, 27 was the exit price, which I've marked up right here with the orange line and the arrow. And then the next hour, just boom, 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 all the way down. So from the time that Holly exited Cube in profit save mode, we got a movement from 25.30 down to 24.62. Okay, so another 60, 70 cents on the table right here if we just exercise a little bit of patience. Once this candle did wick back down, we were well under that 10-period moving average, pretty much timed it perfectly down here. You know, here was the bottom. This candle, boom, violates that 10-period moving average, and then it was boom, 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 back up. So that's pretty much the highlights for Holly today. Everything else was just kind of either a losing trade, one stop out today in the FDT, and then Cube presented the most profit, and just a slow grind down in the cuck today. Other than that, not a whole lot to write home about. You know, this looks familiar. USMC taking a loss and ending up would have been in the money, but you know, I saw this one come out and I saw the dashes and I'm like, yeah, you know,
Yeah, tough
don't
one.
really need that headache today.
No.
Anytime you see dashes on a stock that Holly pulls up, pretty good idea to kind of, you know, shy away from those types of trades, because we do have some thin ones slide through the cracks from time to time, but all in all, do a pretty good job at weeding those out. But they will make an appearance from time to time. Oh, Jeff, your AI prices should not be different than mine. I don't know what you might be looking at there to make you think that the AI prices are different.
Yeah, that's strange. A lot of times, anytime there's a discrepancy in prices, usually what happens is somebody did not close down their trade ideas, and not, you know, they left it running all the next day. But usually you'll have, if you do that, it'll mess a lot of things up, not just prices. So yeah, that's you know, if you want to take some screenshots and send it to info@trade-ideas.com, we'll take a look at it. It says
Right, but
Cube 2527.
it just sounds kind of odd, because if people were seeing different prices, we would have, you know, we'd be hearing about it. So we haven't heard anything like that.
Yeah.
So, you know, maybe it's a setting on your local setup there. But feel free to send it a screenshot, and we can always be happy to take a look at it. All right, Andy, anything else to point out on Holly before I kick it back to you?
No, looks good. You send it on back.
All right.
All righty. All right. So I could not pass on talking about the big bounce short. And I presented this, I think it was last week, or let me just make sure. Let me pull up the spies here. And we are here. Yes, this was last week. I shared it with you guys. And as a matter of fact, I made a little bit changes, because what happens is, and a lot of times you have to do this with your alerts, because when you get a market kind of all stretched out of proportion and you get these huge drawdowns, I shouldn't call it drawdowns, these huge sell-offs and these big bounces, your parameters are kind of, you know, you're talking in terms of 35% down and 20% up, you know, based on maybe something much tighter that you would be using during regular market action, you know, let's say back over in this area and the spiders. So let me get rid of a couple of these things that I drew here. All right, so let me, so what I want to talk about, I mentioned, you know, you have to be prepared for the dead cat bounce after this huge sell-off, big bounce, and here we came up to our 20-period moving average. And I'm going to take this back to this date right here. And this would have probably been, let's see, the 26th would have probably been when I did my webinar last. So let me do this. We're going to go in and we're going to go to time frame, and we're going to go to historical date, and we're going to go back to the 26th. Okay, yeah, 26th, I would have done my webinar. This is perfect. All right, so we're going to go back to see what we were looking at, you know, on this day back on the 26th. Now, I did make a few changes, guys. So some of the ones we were looking at may not be in here because of the changes I made to configuration. Basically, what I'm looking for is stocks that had a big bounce. Let's take a look at the configuration one more time for the new people in here. Okay, there's no alert. We're just looking at a top list. Okay, this is nothing but parameters. I'm looking at stocks that between $5 and $200. This EPS right here is just a hack to eliminate all ETFs. change from 20-day SMA, okay, is, yeah, if I go back here, I think I had this set for like, I'm gonna go ahead and set it back for when I remind me to change it back. So I had this set for -10 because I wanted to find anything, because since all of our parameters had been stretched, I loosened them up here to get a lot of data on stocks that may be coming up to their 10-period moving average. I wanted to see those. And I changed my average daily volume to 1 million shares. I normally have mine at 500,000. And change in 5 days, they have to be up at least 5%. Now we could come in Thursday, I probably had it more like 10%, but that's okay. We're just going to use these numbers and see what we have here. And take a look at some of these charts on this day. Look at that, right? This should be the 26th right there. Perfect. Okay. Perfect little spot to short. And I could probably go through pretty much about, I'd say probably 80% of these stocks. Eli was a beautiful one. You know, just kind of hung out up here. Didn't fall as much as you think it would, but there could still be meat on that bone. I was actually short that, but I got out too soon. And you're seeing the same thing over and over. And this is, guys, this is, look at this save right up there. Boom, gave you 2 opportunities. So even if you saw it on this day or 26, you still, you know, could have got short as soon as it, you know, broke that low right there and had some nice, you know, that's, geez, $6 on a 16 cent, I'm sorry, a $16 stock. That's a huge move, guys. And what I wanted to tell you, here's BA. This is the one I told you guys that I was short on this day right here. Now I was short. I didn't get it right on against the 20-period moving average. I was short from about 180, I believe. And be honest with you, I covered this really quick. I'd like to say I'm still in it, but I'm not. That's the problem with me. When you've been a day trader for 17 years, I got a great eye for entries, which is the most important part of the trade. But I need to work on holding my positions longer. I usually try to go for the meat of the move and then get out and move on. But when you have a nice little entry like that, you really need to let it work for you. But nonetheless, it was a great trade. The other one, and I don't know if it's in here, I mentioned that I was in on that last week on this Thursday, was Zillow. Once again, now this one was right above its 20-period. That's okay. I'm not too worried of things being right below or right below, but if it's right at it, I'll take a chance. And there's another one where I did make some decent money, but got out too quick. I think I got out. But look at these moves. You know, if I'm short from, I think it was around 41, and you know, down here to 35, 36. Those are big moves. So I take my money and run. But once again, if I need to hold on to just a little bit. But let me tell you the trick here, guys. And I mentioned in Steve's webinar the other day that I was short OFC. And I even mentioned how I hated this move that day. But look what happened the next day. Got me, I got out at like 20, but it was a nice slow trade there. And one other one said I got out too quick on today was Wendy's, but that's okay. It was still a decent trade. May get a chance to get back in that. But here's the key, guys, because I know what you're thinking. It's most of you probably don't like shorting, but I'm gonna use BA for example. Okay, and what you got to keep in the back of your mind is when we get in volatility like this, okay, you need to pull way back. So I'm going to give you an example just in BA alone. If it's up here where I shorted it at 180, you know, you could short, let's say 10 shares, only 10 shares. That way you can give you a stop all the way up here maybe to 200. Okay, so let's say you're going to lose $200. You short 10 trades and you give yourself $20. So what you're essentially doing is just taking the position and you're putting a stop out there and you're just leave it alone. Don't try not to look at it and let it work for you. Okay, maybe, you know, you get a nice move, you take half, and that's something I need to work on. And I have a tendency when I, you know, in this volatility, I get a nice move, I peel it all off. But that's my flaw. I'm going to be honest with you. That's the whole key. People, when they get in these vicious bear markets, they have a tendency to trade the same size they were trading when things were normal, like the chart I just showed you a few minutes ago back before this drop. You can't do that. And you can't even trade half size. And I would even go as far as you say, sometimes you can't even trade quarter size. You know, sometimes you got to play even a tenth of what you normally do. Okay, for example, let's say you're used to playing 100 shares of Boeing. I just showed you right there where you could trade 10 shares, and if you held it down here right now, you're almost at $400 on 10 shares. So what I'm saying is you can stay in these things a lot longer. You can stomach the 2-3% moves because you have such small size. It's not stressing you out. It's not bothering you. But anyway, this is a great little, and I'm going to share it for you, share it with you again. But before we do, I want to go back and go through a few of these. Let's take it back to another historical date. Let me put it back on the SPYs because we kind of got another little push here right here. This was on 326. Well, let's look again at 330. I just want to show you if you had this open, what kind of opportunity is just presenting itself to you. Now, I may have to go back and change that. Yeah, I'm going to take off one of them. I'm going to go back to my original. Because since we've had this move and that move big, our 5-day stretch is not going to be as much. So I'm going to go and take out change in 5 days. Now I'm going to tighten this up a little bit now. Since our ranges are kind of tightening up a little bit, I'm going to do a 5%. All right, let's take a look at some of these. Okay, I know I want some sort of move. No, this is not right. Hold on. I must have taken out something wrong. Change in 5 days, 5%. 1,005. Change in 5. Price was this at least 5% in 5 days. 1, 2, 3, 4, 5. I'm not seeing that. Am I CVNA? SQM. BP. What did I do wrong, Jamie? Wendy's. Now Wendy's looks okay, but some of these are not
you
acting
wanted
right.
that, go back to that filter real quick. Yeah, go and configure. Yeah.
Yeah. See,
Okay,
none of these, I got to
so
change from 20-day SMA is 0%, so nothing should be above it.
right, but click on
Change
the
in
little,
5 days.
click on the, yeah, it should be below 5% below or at it, right?
Yeah, exactly. So let me do something here. Time frame, did I go? Let me just put it on today real quick in case that time frame is all messed up real quick. Oh gosh, that's what I was doing. I was looking at today's candles, Jamie. My bad.
There you go. There you go.
Gosh, Andy. Boy. Sorry, guys. Yeah, I'm looking at today's candle. What a dummy. All right, let's put it back on the 30th. All right. Now we're on the 30th, which would be this candle right there. Okay. So even though this dropped that day, it's probably not a great example, but you can see if you look at the change in 5 days, it was still up. See if we can find a few better ones here. Carvana was a nice one there from 30. A little bit of drop there from basically 53 to 46. Eli's, we showed that already. I'll show that again. SQM. A lot of these ones are Wendy's. That's the one that I was short back on this day right here. Made some money, but disappointing that wouldn't move more than what it did. It finally got a move today after I got out of all my shares. This is a great example right here. Going back, see, because you're seeing a lot of the same stuff over and over, a lot of these same patterns. Now this one is what is not working. If you shorted this on the 30th, we wouldn't be way underwater, but nothing bad. There's a great one right there, PFG. Got a great opportunity there on the 30th, and look at that nice little drop from 33 all the way down there. So what you're seeing here, you're seeing a lot of charts. You're not seeing anything that you would have gotten run over in, but you're seeing a lot of them. Beautiful one there from the 30th down. And what I'm trying to kind of ingrain in your guys' brain is I can't tell you how important it is if you are able to put on that shorting hat, you know, when you do get in these bear markets, because let's face it, there's more sellers and buyers right now. That could change over the next few weeks, who knows? But of course, for right now, we're just in a bear market. And when you're trying to sit here and play these longs, these breakouts, or going long, and you're getting frustrated, try to mix it up. Try to put something like this to work. And like I said, you can play, there's another beautiful one right there from the 30th, below the 20 period moving average. Got a nice move from 170, almost 180 to 153. So you can see you don't need a whole lot of money to make, or size, I should say, to make some decent coinage. But let's put it on real time right now. Let's take a look at real time, and let's see if there's anything at us. Now, we're starting to tighten up, so I don't know, you know, what's going to present itself today, but we're going to take a look at it. Maybe we can set some alerts. Okay. This is a great one right here. This is Coca-Cola Enterprise. Okay, we're sitting right at, I guess, Coca-Cola European Partners, sitting right at the 10-period moving average. Now, Mike says Trump speaking. So you want to watch the market, okay? When the market kind of starts, if the market goes sideways like it's possibly going to do right now, we could sell off. So what I would do in a case of the market setup that we have right now, I would maybe just come in here, put an alert, price alert right at that low. If it takes it out, you know, I can evaluate what the market's doing, how the market's looking. Is there any volume coming in? But nice bounce here from, you know, 28 all the way up to 37. So maybe you can get a chance for a rollover. Flow, that's frozen cakes, pies. Boy, this one really it's holding up pretty well. It didn't have a giant fall, but nonetheless, you can see banging up against this 20, maybe one to watch out for. Mark up, keep an eye on. And here's the thing, these things will be, you can keep this up during live market action and check things out. And I have mine set from change in 5 days, okay? You might want to do it change from the close. Get the ones that were strong. Oxy, little oil play that never really finished out, still finished up 18.7% today, but petered out like a lot of them. Which is the next? Let me go ahead and share this with you again, since I changed some of the parameters. You put it back on live, okay, during that. Let me put it back on change in 5 days, because these are going to give you the ones that kind of bounce the most. Maybe people are looking to take profits quick who caught the bottom or whatever. So let me just go ahead, save this and share it. And then we're going to talk about breakouts. Big bounce. Should call it the big short. Big bounce short. Pardon my dog. All right, you guys have access to that, and now we're going to move on to the last. Let's see, what do you say? Can you display the settings in that scan? Yeah, RJ, I can display. I displayed them, but let me show you too. I just shared it actually, RJ. If you have a subscription, you can just grab it from the chat panel in your GoToWebinar interface. But basically, I'm looking for stocks $5 to $200. Okay, change from the 20-day SMA. Okay, I'm looking for things that are below the 20-day SMA. Now, if you wanted to, you could probably relax this a little bit. Maybe you put 0.05 and you can catch things that are just barely above. You might want to do that too. You know, 0 if you want to keep things that are below. And then I want change in 5 days. I want it to have at least moved up, you know, 5% over the last 5 days. All right, he says he got it. All right, so this is a very good momentum scan right that I like. It's called Extreme Master Blaster. I'll be happy to share it with you guys, but I'm going to be honest with you, be careful this time of the year, okay? If you're accustomed to playing momentum, you're going to find that a lot is not working. Let's look at everything that came through here today. CRTO. Look at that. Let me zoom in a little bit here, get more data. Of course, that was just an immediate wick and just sold off all day. APOG, that's pretty. Look at that. Gap up, boom, sold off all day. IO, this is when move, big move, first 15 minutes, and really just back and forth, pretty much closed slightly down. In a bull market, this thing is full of all sorts of things. There's one nice for you right there. Quick move. A lot of people chasing it through this breakout right here. Let me draw the old line. You know, historically, this is a beautiful setup. Go, had a little inside day pause, but look at this. Boom, slapped right back down and did not work. You're going to see a lot of charts like that in bear markets. There's another one if you're chasing. XLE, okay, this is when the oil stocks took off. And I played a few of them today. And luckily, I took my profits in Halliburton because, you know, it got slapped down, finished up okay, but I sold mine above where it closed there. And then I was really frustrated. APA was basically a flat, just could not get anything going. Huge volume today. You can see, look at that huge volume. Had a nice little horseshoe here. Thought it may dig in and go up higher. And then when it broke down, I sold it basically for a flat once it broke that 15-period moving average the second time. This can be frustrating, you know, when you get huge volume like it had today, and it can't. Of course, it's still some people will argue who are still sitting in it from maybe yesterday that it's still up 17%, which is a good day, but boy, when you talk about how far it has fallen, you know, you would expect a little bit more than what we saw today. But the oil sector kind of did the same thing. Got some news from Trump this morning. But I was in Halliburton early, just watching when the oil horseshoe right there. I got in Halliburton, luckily. All right, so. But even if you are not looking, and that's probably a lot that was all coming through, not a whole lot of stuff coming through that. You can see it's all oil and gas. This one, Vox, once again, good volume. All the parameters are being met, but just fading, closing at the end there. So, and I can go on and on. It doesn't matter whose momentum scan you give me. Okay, you're gonna see a lot like this, and I know how traders, especially ones that have been trading only the last few years and never experienced a bear market, a lot of them are getting run over, and they don't understand what's going on. You know, this has always worked for them in the past. Why aren't people buying this anymore? It's just simple. It's simple. Just all you have to do is look at a chart of any index right now. It's a bear market, which simply means you have more sellers in this market than you have buyers. People are looking to sell equities. And I don't care what kind of news comes out there, there's probably somebody who wants to sell, and they're just smashing these things down. You get a lot of head fakes. Even stocks that are strong, you know, you can't trust them. Let's go take a look at Zoom. You know, a lot of people got excited on Zoom, bought this day right here because, you know, you think it's going to break out and just get, you know, smashed. Another one I think the other day was Docu, was it? Maybe it wasn't. Yeah, there you go right there. Look at these 2 wicks. Boom. Let's draw the all-time high. This is a great example. Look here, boom, 3 days, and then today they got fed up. People who are holding this stock and looking for it to keep breaking out of all-time highs, and finally it just people threw their hands up and given up. So be careful. Breakouts do not work in bear markets mostly. There will be some exceptions. But for the most part, you do not want to be buying breakouts. You do not want to be chasing momentum. And you may say, well, Andy, what should I do? This is what I've always done. Well, this is why you have to change. This is why you have to adapt. One way you could do is maybe learn to short, maybe learn to put it on small size, okay? And if you say, I don't want to short, well, then you go to a strategy of maybe where you're looking to buy pullbacks, stocks that, are pulling back to a level. Maybe, you wanted Zoom, don't chase it up here. Maybe this had a nice pullback on some news that, maybe you keep an eye on this, and if it can, gain some strength and get back above maybe this level right here where it broke down from. I'm trying to put an alert. There it goes. So I just set an alert. If it can get back above this all-time high over here, maybe you buy it there. Don't be chasing up here. There's ways to play to the long side. Don't feel like you have to go short. Or sometimes a nice trick of doing is play some ETFs, some bearish ETFs, whereas if you feel like you're kind of going long, because essentially you are going long, you're just going long a bearish ETFs, and a lot of times I feel like that makes it a little bit easier for me. But you gotta do something else. I just want to say I don't have any magic tool as far as to give you to prevent you from doing these things. But until we get out of this bear market, I promise you, it's a death warrant. It's if you continue to chase momentum and do what you did back for the last several years, because I've seen it just wipes many trader out. But Jamie, I don't have any more to add today. I just kind of sometimes I just want to do some lessons because I know it can help a lot of new traders when it comes to navigating these bearish price action.
Yeah, absolutely. And I mean, hey, if you're a newcomer, what a time to come into the market. There's not a lot of certainty one way or the other. So, a little bit of both in these conditions. There will be stocks going up, there will be stocks going down, but as you were pointing out earlier, the breakouts at all-time highs are probably better fades than they are longs, depending on, the instrument in hand, not if it's an inverse, obviously. But yeah, I mean, interesting times.
As a matter of fact,
Andy.
Yes, I'm going to share with you one called Extreme Carnage, and basically it's just the opposite of Extreme Master Blaster. It's looking for stocks that are going down. All these are going down on heavy volume. You got to be careful, because shorts tend to fall a lot faster, so you got to be careful chasing shorts as well. But the momentum is on the downside right now, so maybe this will help you. So I'm going to go ahead and drop it in the chat panel. Extreme Carnage is the name. There you go. And with that said, if there's no more questions, you're welcome, Mike C. And yes, inverse ETFs. That's the word I was looking for. These bearish ETFs are inverse ETFs. Be careful with them. A lot of them are ultra and sometimes triple leverage, so you got to be careful. But once again, small size. Andre say, is there an option for stocks that follow directly with the SPY, or how can I find stocks? Well, if you want something, there's nothing better. There's options available on the SPYs, and I'm not sure why you'd want a stock that follows the SPY. Nothing follows the SPY better than the SPY. But there's some out there. It's some of your bigger caps. There's Microsofts, and some of those will kind of follow it, but
there's always, I mean, Andy, you've seen it as well as I do. Many stocks will mimic the S&P chart, okay?
Mm-hmm.
But that doesn't necessarily mean you've got an edge by watching the SPY, because it all happens simultaneously, right?
Right.
Other than that, I would just say, one of the old school metrics, beta, how much a stock moves
Yeah.
in relation to the market would be the thing that you could focus on,
Mm-hmm. Thank you, Jamie. All right, since there's no more questions, thanks everybody. I'm going to bring in Scott, and then he's going to walk us out. You guys hang on. He will have a discount code for you.
Right on. Thank you, Andy. Couple things to talk about on the way out. We have a daily support session. Make sure you join us if you're online. Just tune in to our YouTube channel and check it out. It starts at 12 p.m. Eastern, 9 a.m. Pacific. We've also got a new ebook out, and it can be found at trade-ideas.com/earnings. It's written by our Chief Information Officer, Dave Mabe, and it covers some great topics about how to take advantage of earnings season. It also includes strategies that you can import into your layout. It's free. Go ahead and check it out, trade-ideas.com/earnings. It's a Trade Ideas podcast we release periodically, and we've got some new interviews up that came out earlier this year. Probably have a new episode out soon, so stay tuned for that by searching for Trade Ideas Podcast wherever you listen to your podcasts, and add us as a subscription. Check out the last few releases while you're waiting for the new one, and then you're ready to catch the new one as soon as it comes out. We've got a new code this month for a discount, Spring Holly, 15% off your first month or year of Trade Ideas. It also saves off of an upgrade from standard to premium. It's case sensitive, so it's all caps, Spring Holly. Any questions, email us, info@trade-ideas.com. That goes into our help desk software, gets you the support you need. You can follow Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have @Trade Ideas. And Trade Ideas Pro is the Facebook handle. We recorded this webinar, so we have the recording up later on tonight or tomorrow. You get an email reminder tomorrow about how to find it. Thanks, everyone, for attending. Thank you, Jamie. Thank you, Andy. Have a good one.